So here's something that nobody talks about enough, but absolutely everyone dealing with it knows exactly what I mean. You buy a house, which is supposedly the best financial decision you can make, right? It's an investment. It builds equity. Everyone tells you it's the path to financial stability and wealth, but then you actually own the house and suddenly you realize something terrifying. You've got plenty of money for the mortgage payment, but almost nothing left for literally anything else. You're sitting on what looks like a valuable asset on paper, but in real life, you're eating ramen, skipping social events because you can't afford them, and having panic attacks every time something breaks in the house. Welcome to being house poor in 2025. My name is Nick, and I spend way too much time thinking about money, real estate, and why so many smart people end up trapped in situations where they technically own a valuable asset but functionally have zero financial freedom. If you're currently experiencing the joy of being house poor, or you're thinking about buying a house and want to avoid this trap entirely, make sure to hit that subscribe button and give this video a thumbs up if this situation feels painfully familiar to you. Let me paint you a picture of what being house poor actually looks like in 2025. The housing market has absolutely lost its mind. The median home price is now over $400,000 in most major cities, and even in less desirable areas, you're looking at $300,000 minimum. The days of buying a house for $150,000 in building equity are basically gone unless you want to live somewhere absolutely nobody wants to live. So people are making bigger and bigger compromises to get into the market. They put down smaller down payments, they stretch their budgets to the absolute limit, and they convince themselves that it's worth it because they're building equity instead of throwing money away on rent. Except here's the thing nobody mentions. When you're house poor, you're not really building that much equity anymore. Yeah, technically a portion of your mortgage payment goes toward principal and equity, but when you can barely afford the house payment, property taxes, insurance, and maintenance, you have zero money left for anything else. You can't invest. You can't save. You can't build an emergency fund. You're completely vulnerable to any financial crisis. So what looks like a smart investment on a spreadsheet actually becomes a financial trap that locks you into a narrow corridor of survival mode living. The whole house poor phenomenon has gotten worse in 2025, specifically because of how ridiculous housing costs have become relative to actual incomes. The traditional rule of thumb used to be that your housing costs shouldn't exceed 28% of your gross income. 28%. That meant if you made $75,000 a year, your housing costs should be around $21,000 annually, or $1,150 per month. Seems reasonable, right? But here's what's happening in the real world. People are spending 40, 50, sometimes 60% of their gross income on housing. I know people spending more on their house than on food and transportation combined. They're not just breaking the 28% rule, they're absolutely obliterating it. And they're doing this because housing prices have completely detached from income growth. Incomes have grown maybe 20 to 30% over the past decade in most fields. Housing prices have doubled or tripled. The math literally doesn't work anymore. So people are making a choice, and I understand why they're making it, but it's a choice with serious consequences. They're deciding that they would rather be house poor than rent indefinitely, even though renting indefinitely might actually be the more financially sound decision. The psychology behind buying a house, even when it makes you house poor, is fascinating and honestly pretty understandable if you think about it for a second. There's this narrative that's been drilled into American culture for decades that renting is throwing money away and owning is building wealth. Rent doesn't build equity. Owning does. It's been repeated so often that most people accept it as absolute truth without actually thinking through the numbers. Your parents probably told you this. Every financial advisor tells you this. So by the time you're ready to buy, you're convinced that not owning equals failing financially. Plus, there's this feeling of permanence and security that comes with ownership. When you own a home, you own it. Your landlord can't kick you out. Your rent can't spike because the owner decided they wanted higher returns. You're safe. You've got stability There's value in that psychological piece. I'll admit that. But the problem is when you're house poor, you don't actually have that peace. You're still stressed about money all the time. You're just stressed about money while technically owning an asset. And then there's the social pressure element. Your friends are buying houses. Your family keeps asking when you're going to buy a house. Society tells you that owning a home by age 30 or 35 is a mark of success and adulthood. Renting somehow feels like you're failing at life, even if you're actually in a much more comfortable financial position than your friends who stretch themselves to the absolute breaking point to get into a house. Here's what actually happens when you're house poor. And I want to be specific about this because it's not just a vague feeling of being broke. It's a specific type of financial trap that affects literally every other area of your life. First, you lose the ability to handle emergencies. This is huge. When you're spending 50% of your income on housing costs, you've got maybe 40% left for everything else after taxes, food, transportation, insurance, utilities, phone bill, internet. All of that comes from that remaining 40%. If something breaks in the house, you don't have emergency savings to fix it. Your car breaks down, and suddenly you're choosing between fixing it or paying rent. Your kid needs braces, or you need a dental procedure and you're going into credit card debt because you have no savings cushion whatsoever. Every single unexpected expense becomes a crisis. Every crisis forces you into debt because you have no buffer. And that debt compounds quickly, making you worse off financially than if you'd rented a cheaper place. The career implications of being house poor are also pretty brutal and something a lot of people don't anticipate. When you're financially stretched that thin, you lose the ability to make good career decisions. You can't quit a bad job because you need the income to cover your house payment. Your boss can treat you terribly and you have to accept it because leaving means financial catastrophe. You can't take time off for medical issues or mental health. You can't invest in education or training that might lead to better opportunities because every spare dollar goes to housing. You're completely locked into your current situation. This is the golden handcuffs effect. Your employer knows you can't leave. And this creates this weird paradox where the people who are most in need of career flexibility and advancement are the ones who have the least ability to pursue it. They're locked in place by their mortgage payment. Meanwhile, people who rented and built up savings have the freedom to make strategic career moves, take calculated risks, and actually advance their financial situation. The house poor person is essentially treading water while trying to act like they're thriving. Then there's the investment problem. Remember how we talked about compound interest and the power of investing $500 or $1,000 every month? Well, when you're house poor, you're investing nothing. You've got $0 at the end of the month to put into investments. The goal of investing is to have your money work for you so that over decades you build serious wealth through compound growth. But if you're spending all your income on a house, you're not participating in that system. Your money is all locked up in your mortgage. You're making the bank wealthy while your own net worth stays stagnant. Technically, your house is appreciating in value maybe, but you can't access that value. You're living in it. You're not selling it. For all practical purposes, that equity is meaningless while you're alive and stressed about making ends meet. Compare that to someone who rented a cheaper place, invested that difference, and after 20 years has several $100,000 in investments earning returns. That person is wealthier than the house poor person, even if the house poor person's home is worth more on paper. Why? Because one of them has actual liquid wealth and the other has an asset they can't touch without displacing their life. The maintenance costs are another thing that absolutely crushes people who don't anticipate them. When you rent, your landlord is responsible for repairs. The roof leaks, the landlord fixes it. The plumbing backs up, the landlord fixes it. The HVAC system dies, the landlord fixes it. But when you own, it's all on you. And housing maintenance is expensive, like shockingly expensive. You need a new roof that's $10,000 to $15,000 depending on your house. Your plumbing needs major work, that's $5,000 to $10,000 minimum. HVAC replacement is $8,000 to $15,000. Water heater replacement is $1,000 to $3,000. Foundation issues are basically a disaster and could literally cost tens of thousands of dollars. And these aren't things that happen once. Houses are constantly needing maintenance. Something is always breaking or wearing out. The average homeowner should be setting aside about $500 per month just for maintenance and repairs, according to financial advisors. But when you're house poor, you're not setting aside $500 per month. You're not setting aside anything. So when something breaks, which it will, you're either going into debt or you're deferring maintenance, which means it gets worse and more expensive later. It's this endless cycle of financial stress and deferred problems. Now let's talk about what being house poor actually costs you in terms of quality of life, because the financial numbers don't capture the whole picture. When you're house poor, you're stressed about money all the time. And I mean all the time. Research shows that financial stress is one of the leading causes of health problems, relationship problems, and early death. You're not sleeping well because you're worried about how you're going to pay for something to break. You're irritable with your family because you're constantly anxious about money. You're withdrawing from social situations because you can't afford to participate. You're working long hours at a job you might not even like because you need every dollar. Your whole life becomes smaller and more constrained. The thing that was supposed to represent success and achievement and stability is actually making you miserable. And that's a really hard realization to come to terms with after you've already bought the house and are locked into a 30-year mortgage. You bought the thing you thought would set you free, and it actually did the opposite. It trapped you. So what do you do if you're already house poor? The first thing is to acknowledge the reality of the situation. You made a financial decision that isn't working out the way you hoped. That's okay. People make mistakes with money all the time. The key is recognizing it and adjusting instead of just accepting it as your permanent fate. If you're truly struggling, you need to consider whether selling the house makes sense. I know that's not what you want to hear. You probably put money into this house. You might have emotional attachment to it. But if it's making your life miserable and preventing you from building wealth, it might be the right call. Yes, you'll lose money on realtor commissions and closing costs. Yes, there might be regret about the experience. But getting out from under a house that's too expensive might give you the breathing room you need to actually build financial stability. Renting a cheaper place, building up savings, and then buying a house you can actually afford might be a better path than staying locked into a mortgage that's drowning you. If selling isn't an option or you're not ready to do it, then you need to aggressively reduce other expenses to create breathing room. This is where tracking your spending becomes critical. Where is every dollar actually going? Usually when people do this exercise, they find hundreds of dollars per month in discretionary spending that they didn't even realize was happening. Subscriptions they forgot about, dining out more than they thought, impulse purchases. Sometimes you can find $500 or more per month that can go toward building a small emergency fund or paying down other debt. You need to be ruthless about cutting things that aren't essential. I know that sounds harsh, but you're in survival mode financially. You can't afford to be comfortable with your spending right now. Another option is to increase your income. And I recognize that's easier said than done for some people, but it's worth exploring. Can you pick up a side gig? Can you ask for a raise at your current job? Can you move into a different role that pays more? Even an extra $500 per month would dramatically change your financial situation. That's money that could go toward building an emergency fund or paying down credit card debt that you probably accumulated dealing with unexpected expenses. Income increases are often the fastest way out of the house poor trap because they give you options and breathing room without having to sell the house that you've already committed to. You should also look at whether refinancing makes sense. If interest rates have dropped since you got your mortgage, refinancing to a lower rate could reduce your monthly payment significantly. Even a 0.5% reduction in your interest rate could save you hundreds of dollars per month on a $300,000 mortgage. That money could be the difference between being barely able to afford your house and actually having some breathing room. Obviously, there are refinancing costs involved, so you need to do the math, but it's worth exploring if you're severely house poor. Another option that some people don't consider is renting out a room in their house or a portion of the property. This can be complicated, and there are definitely downsides like losing your privacy and potentially having tenant issues, but it can also be a way to generate significant monthly income that directly reduces the burden of your mortgage payment. If you can rent out a room for $800 to $200 per month, depending on where you live, that immediately makes your house payment feel less crushing. It's not ideal, but it might be better than the alternative of being completely financially paralyzed. Here's the thing, though, that most people need to hear. If you're thinking about buying a house and you're worried about ending up house poor, there are ways to avoid this trap. Right? The first is to be more conservative than you think you need to be with your budget. Lenders will approve you for a much bigger mortgage than you can actually afford. The maximum they'll lend you isn't the same as what you can actually handle. Just because you can get approved for a $400,000 mortgage doesn't mean you should take it. If that $400,000 mortgage is 50% of your income, you're setting yourself up to be house poor. A smarter approach is to aim for a house that's maybe 2.5 to 3 times your annual income, not the 4 or 5 times that lenders will allow. I know that probably means buying a smaller house or waiting a few more years, but the alternative is decades of financial stress. Also, you need to factor in all the actual costs of homeownership when you're deciding how much house you can afford. It's not just the mortgage payment. You need to account for property taxes, homeowners insurance, HOA fees if applicable, maintenance and repairs, and utilities. All of those things together might be 40 or 50% more than just your base mortgage payment. A lot of people look at a mortgage payment of $2,000 and think that's what homeownership costs. But really, they're going to be spending $2,600 to $3,000 per month on all the actual costs. And that's assuming nothing breaks. The moment something needs fixing, that number goes up. If you can't comfortably fit that full amount into your budget with money left over, you can't afford the house. Period. You just can't. I know it's hard to hear, but it's the truth. Building up a bigger down payment before you buy is also really important. I know everybody wants to buy as soon as possible, but putting down 20% instead of 3 or 5% dramatically changes your financial situation. Not only does it lower your monthly payment, but you avoid paying PMI, which is another $150 to $300 per month, depending on the loan amount. A bigger down payment also means you have less leverage and less risk. You're more likely to be able to handle unexpected situations. And honestly, waiting a few extra years to save a bigger down payment often means you're buying at a lower price point anyway, because the market shifts. Time is usually on your side when you're patient. And finally, you need to build an emergency fund before you buy the house if you can. Not just a tiny emergency fund, but 3 to 6 months of expenses minimum. This gives you a buffer so that when something breaks in the house or you face an unexpected expense, you don't immediately go into debt. You use your emergency fund, then rebuild it. This is the difference between handling homeownership gracefully and becoming house poor. Having that buffer completely changes how you experience house ownership because you're not living on the edge every single month. Look, I get why people are drawn to homeownership. It feels like the adult thing to do. It feels like you're building something permanent. It feels like an investment, but being house poor isn't the same as being a successful homeowner. Being house poor is when you bought a house that's too expensive for your actual financial situation. You're not enjoying the benefits of homeownership. You're experiencing all the stress and liability with none of the financial freedom. The goal of getting into real estate should be to build wealth and create options, not to lock yourself into decades of financial anxiety. If you're already there, recognize it, adjust it, and get yourself out if you can. If you're thinking about buying soon, plan more carefully than you probably think you need to, because the most expensive house you can afford is very often not the house you should buy. The house you should buy is the one that lets you sleep at night and build actual wealth while you own it. That's what real financial success in homeownership looks like.